James wanted to buy a house and would need to make a down payment of $100,000 in 2 days. He has enough funds in the bank, but the bank says he can only withdraw $25,000 per day and $75,000 per week. What a hassle. What do you think James can do? Any alternatives? Well, we will talk about the bank crisis on Bitcoin and cryptocurrency as a whole with Mark Yusko. But first, let me tell you who is Mark Yusko. He is an American investor, entrepreneur, and philanthropist who is the founder, CEO, and Chief Investment Officer, CIO, of Morgan Creek Capital Management, a registered investment advisor located in Chapel Hill, North Carolina. He has over 35 years of experience in the investment industry, having worked at several top Wall Street firms including Morgan Stanley, Merrill Lynch, and Citigroup. He is known for his expertise in alternative investments, like that of Bitcoin and other cryptocurrencies. When topics about Bitcoin and cryptocurrencies are concerned, Yusko's take is one to be considered. According to him, Bitcoin is a decentralized digital currency that operates on a peer-to-peer network, meaning that it is not controlled by any central authority or government. It works using blockchain technology, which is a decentralized ledger that records all transactions that have ever occurred on the network. One of the key features of Bitcoin is that it has a limited supply, with only 21 million Bitcoins ever to be created. This is designed to prevent inflation and ensure that the currency remains scarce and valuable. New Bitcoins are created through a process called mining, where powerful computers solve complex mathematical equations to verify transactions on the network and earn new Bitcoins as a reward. To visualize what has been said, let's say that John wants to send Bitcoin to Jane. John would initiate the transaction by creating a digital message that includes the amount of Bitcoin he wants to send and Jane's digital wallet address. This message is broadcast to the network of nodes, which verify that John has the necessary funds and that the transaction is legitimate. Once the transaction is confirmed, it is added to the blockchain, and Jane can see the Bitcoin in her digital wallet. The entire process is fast, secure, and transparent, with no need for intermediaries such as banks or financial institutions. However, Bitcoin is not without its problems. One of the most significant issues is its volatility. Bitcoin's value can fluctuate wildly in a short period of time, which makes it a risky investment for many people. For example, in late 2017, the price of Bitcoin surged to nearly $20,000, only to crash back down to around $3,000 by the end of 2018. Such price volatility makes it difficult for investors to predict how the currency will perform in the future. Despite these challenges, there are many reasons why people are turning to Bitcoin as an investment. One of the most compelling reasons is its potential to serve as a hedge against inflation. As the world's central banks continue to print more money to stimulate their economies, the value of fiat currencies like the US dollar is likely to decline over time. In contrast, Bitcoin has a limited supply, with only 21 million Bitcoins ever to be created. This scarcity could help to preserve its value over time, even as fiat currencies lose value. As Mark Yusko has pointed out, the rise in the price of Bitcoin is not necessarily because Bitcoin is getting better. Instead, it's because the dollar is getting worse.
Reversing a year's worth of QT. So people are anticipating increased liquidity, therefore the dollar weakened, and we see that against the yen, against the euro. And so basically, when the price of Bitcoin rises, it's not because Bitcoin's getting better. Bitcoin doesn't get better, Bitcoin just is. What happens is the dollar is getting worse. And so as the dollar loses its world reserve currency status, slowly, Bitcoin will continue to appreciate. And so for everyone, literally everyone, you should have a portion, not all, but a portion of your wealth outside the fiat system in something like Bitcoin, which will preserve that purchasing power against that eroding fiat.
As the US dollar loses its status as the world's reserve currency, investors are looking for alternative investments that can help to preserve their purchasing power. Bitcoin, with its decentralized, secure, and scarce nature, is seen by many as a potential solution while seeing dollar currency as a threat. Of course, investing in Bitcoin is not without risks. The currency is highly volatile, and its value can fluctuate dramatically in a short period of time. Investors need to be aware of these risks and should only invest money that they can afford to lose. However, for those who are willing to take on the risk, Bitcoin can be an attractive investment option. Another problem that has been raised by Mark Yusko about using cryptocurrencies is this.
And everyone has an app that can move their money. Now, the question is, well, if there's only one bank, you can't move it anywhere. Where are you going to move it? So it reminds me, the first time I tried to transfer money from Bank of America to Coinbase to buy Bitcoin, they're like, all right, 14 days. Like, what do you mean 14 days? I'm like, well, you have to wait 14 days. I'm like, why? It's my money. I'm like, no. You didn't read the fine print. It's actually our money. And it says right here, we can wait 14 days to give it back to you.
According to him, this process of transferring money from bank to Coinbase is a hassle because it takes a lot of time. This is because banks operate on a traditional centralized system that is regulated by the government, while Coinbase operates on a decentralized system that is not subject to the same regulations. This means that when you transfer funds, the transaction needs to be verified and processed by both systems before the funds can be released. And this equates to more or less 10 working days or 14 days. For example, let's say you want to transfer $1,000 from your bank account to your Coinbase account. The bank will need to verify that you are the account holder and that the transfer is authorized. This verification process can involve several steps, such as verifying your identity, checking your account balance, and confirming that the transfer is authorized. If there are any errors or discrepancies in the transaction details, the process can take longer, and you may need to provide additional documentation to resolve the issue. Once the bank verifies the transfer, the funds are then sent to Coinbase. Coinbase also needs to verify the transfer before releasing the funds. This verification process involves confirming that the transfer is authorized and checking that the funds are coming from a legitimate source. If there are any issues with the transfer, Coinbase may need to contact the bank to resolve the issue, which can further delay the process. Just look at how it can sometimes be tiring to use such alternative investments in a world with a lot of people using the dominating dollar currency. Bitcoin and other cryptocurrencies have revolutionized the financial industry by introducing a new and decentralized way of storing and transferring value. However, the technology is still in its infancy and there are several challenges that need to be addressed, such as high transaction fees, scalability, and security concerns. Despite these challenges, the potential benefits of cryptocurrencies are significant. They offer a way to bypass traditional banking systems and allow for fast and secure transactions across borders. Additionally, they offer an alternative store of value that is not tied to government-backed currencies and can serve as a hedge against inflation. As such, it is important for individuals to educate themselves about cryptocurrencies and the blockchain technology that underpins them. By doing so, they can make informed decisions about investing in and using cryptocurrencies. It is also important for governments and regulatory bodies to establish clear guidelines and regulations to ensure the safety and security of users, while also fostering innovation in the industry. What do you think about this topic? Let me know in the comment section below. Don't forget to like, share, and subscribe to this channel. I'll see you in the next video.